Hello everyone. This is the pre-market report video for today, 30th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Today, first I'm going to discuss some interesting statistics. We know yesterday was August monthly expiry. So all the future and derivative contracts that relates to August month is over. And if you see the total change in the open interest on the future market, in the index side it was dropped only by 4%. Whereas on the stock future side, the open interest was down by 6.5%. So 4% of the open interest, which comes around 32,000 number contracts, is the rough total amount of future index trade volume that matures monthly and closed, whereas others expects to be rolled over into the next month. Similarly, in the stock future market, that number is around 3.5 lakh contracts, which was allowed as expiry. Whereas in the option case, 27% of the total index option was closed, and in stock options, near 57% of the total position allowed to expired. So the takeaway is mostly the future market trading is mid to long term, 90% above 30 days, whereas near 50% of the option trading is short term, less than 30 days. And in that 50% option trading, near 65% of the trading is done by retail people. Again, this is also one of the huge reasons why option premium in India is too low. All short-term options reducing the India VIX. Anyway, back to yesterday's market. As we discussed in the last pre-market video, Nvidia results had negative impact on the global momentum, but not massive as implied in the US aftermarket trading. Rather, it's just a mild impact. Nvidia's results were good and the future market forecast also good, so it didn't influence much. However, yesterday at 2 p.m., Reliance AGM was started. As soon as it started, that AGM related influence with the expiry day volatility made the Indian market crazy volatile, sharp 100 points drop, and in next some minutes up 100 points, etc. Here don't know the reason for the first 100 points fall, but when Mukesh Ambani announced that he's considering the bonus issue on the upcoming board meeting on 5th September, market bounced back. Out of the 100 points Nifty rally, 35 points supported by Reliance. Then these are the 5 remaining stocks which contributed to the remaining 65 points. Here Tata Motors 3.5% positive run was due to their DVR mergers effective day, and Bajaj Finance and FinServ positive rally was due to their mortgage business demerger information. And honestly, I don't know the influence of ITC Limited, like why it was 2% positive yesterday. So if anyone knows that, please let me know in the comment section. Then regarding institution, as per NSE India website, FIA was net buyers, but as per NSDL website, FIA was net sellers. In NSE, BSE and MSCI, FIA net bought the shares worth of 3,260 crore rupees. But including all other deal, they actually net sold the shares for approximately 550 crore rupees. Whereas regarding DII, just based on NSE data, DII was also net buyers. They net bought for 2,700 crore rupees. So these are the quick takeaway from yesterday's Indian market. Now coming to US market. As expected and discussed in the last video, Nvidia share did drop around 6.5% in their spot market. However, the whole US market was not that much negative. The second quarter US GDP data came as 3% increase against the expectation of 2.8%, which is really positive. And in addition, not PC inflation but PC prices increased only by 2.5% against the expectation of 2.6%. And it was way less than 3.4% increase a month ago. Just for everyone's benefits, PC prices means it represents the total amount worth of goods and services consumed by the household. Whereas the PC price index or simply PC inflation represents the average price change that paid by the consumer for the goods and services. I hope everyone can able to follow me. PCE prices is just the total raw amount value, like how much the living expense. PCE price index means how much it changes over the time. Anyway, that macro also came in favor. Hence, despite the weakness in Nvidia stock, US market closed mixed. Dow Jones increased 0.59%, S&P 500 closed on the absolute flat note, Nasdaq decreased by 0.21%. In case of VIX, it crashed by 8.5% and moved to 15.5 from above 17. In line with that, early morning today, September month GIFT Nifty closed mild negative 25,240. Generally for this month of the day, the premium has to be 100 points. Hence, if we consider that premium means, then it's an indication of around 50 to 80 points gap down opening. Then regarding Indian ADR, all four closed significantly positive. In the Indian market, Infosys and ICICI Bank closed negative, whereas HDFC Bank closed flat. Despite all that, last night ADRs closed positive. Hence, it's all fresh move and indicating the positive opening today. So those were the things happened yesterday in the global market. Now let's look at the new India related info. It's just one, and that too about the monsoon. Yesterday, Meteorological Department issued the warning that this monsoon expect to continue until the end of September, which means this got the potential of damaging the crop. Hence, this from the stock market perspective might influence negatively on the FMCG stocks. As a summary, US market closed mixed. In line with that, for now, Nifty also indicating the 50 points gap down opening. However, because of the new bonus issuance, Reliance is positive and all Indian ADRs are indicating the positive opening. Either way, tonight, PC inflation is due to release, so most investors don't want to carry their positions. Hence, if profit booking means, then in the afternoon today, market will fall. But I think today it will be short covering. Hence, most probably today in the afternoon, market will increase slightly. About the things to look out, at present, Japan's consumer inflation and unemployment data was released. Both of them was not good and both of them substantially increased. So most probably this will influence the Asian market on the negative side, and again high chance that might trigger the sell off in Indian market as well. Then in the afternoon at 2:30 p.m. Europe's consumer inflation and unemployment rate is due to release, and finally in the night for US, PC inflation are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 20 points gap down at the day's low. However, then it moved closer to 25,200, finally closed at near 25,150. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with above average volumes. Finally, yesterday, Nifty had a consolidation breakout and continued to form higher high formation for the fourth consecutive session with positive bias in RSI and MACD momentum indicators. Hence, in the short term, Nifty might move towards 25,300 with support on the lower end at 25,000. In case of Bank Nifty, it also opened 50 points gap down and continued to underperform Nifty. However, once again it defended 50,900 level and ended at around 51,150. Thus, on the daily chart, Bank Nifty formed a small bodied bullish candlestick pattern with long upper shadow and a minor lower shadow. Bank Nifty traded within the range of the previous couple of trading sessions. Hence, a breach above 51,400 might lead to an up move towards 51,900, and on the downside, 51,000 is the crucial support zone. Regarding the monthly options data, the maximum call option open interest was at 25,200 strike, followed by 25,500 and 25,300, with maximum new call option writing at 25,200 strike, followed by 25,300 and 25,500. On the put side, the maximum open interest was at 25,100 strike, followed by 25,000 and 25,200, with maximum new put option writing at 25,100 strike, followed by 25,200 and 25,000. Thus, from options data, it's indicated that 25,300 and 25,500 might be the next target level for Nifty, while 25,000 might act as a support level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.